down, I had to clear off the wrappers. We had Halloween last night,
I,
and
I was gonna say, did you
it's
party
like
all night long?
I got the big stack right here. Just like oh, gotta throw that
Oh,
away.
you're serious? Like just a pile of candy
Nah,
wrappers. Brandon's over there
it was maybe like
in a
that
sugar
big,
coma.
right? I was disappointed at the haul.
Why
My
are we,
kids
the
came home with
quantity or
bags.
the types?
Sorry, what again?
Quantity of candy or the type of candy?
Yeah, I'm a chocolate guy, but there are some sugar candies I do like. The Tootsie Roll, the fruit flavored Tootsie Rolls.
The
None of that.
fruities. The
I'm like, my
fruities,
kids came
yeah.
home, like they went to different neighborhoods and stuff, came back with like 10 plus pounds of candy in a bag. And I'm like searching through them. Okay, where's the little Twizzlers? Where's the Tootsie Roll? Because I got the chocolate, I got my own candy we're handing out. None of that stuff. But I did pound a few hundred grands.
I was good. I was actually going to bet on you like the 100 grands.
I do like the hundred grands. The crispy chocolate and then the caramel in the middle.
Yes, that's
And
right.
it's a
They
hundred
were
grand.
awesome.
Who wouldn't
That's
want to eat a
right.
hundred grand?
Well, speaking of 100 grand, this is about how much we missed payroll today.
Yeah, we did. Man,
We'll
are, are
get
are
to
we
it.
finally gonna be truthful on data now? Is this like we're just having this realization, hey, election coming up, let's try to steer the ship a little bit back towards normalcy.
I don't know. I don't know. Could it be that we're still lying and it's
It's still
even
lying and it's
worse?
that bad.
It's that bad.
Right. I mean, yeah, that's a hard one. You saw that a lot, like, the Obama administration. There was a lot of earnings, just like angst, because how is this adding up? We've
Yeah,
seen that,
it
especially this
didn't
past
happen.
year. It's like, okay, where'd the million jobs go? When are we going to see the revisions reflected? And again, it's like an election year, which we're going to talk about.
Yeah, well, it was quite the miss. We're going to start out with the jobs report. We're going to get into the nitty gritty here.
Let's
Uh,
hit let's hit jobs.
let's
So
hit
we'll
jobs.
look at how the market's responding.
So this was reported yesterday, not today. This is yesterday's. Was reported by yesterday by the BLS, Bureau of Labor and Statistics, and so they kind of slide these in there. They don't tell you anything. It's not a big announcement. It's not ADP. It's not non-farm payroll Friday. But yesterday they reported that September jobless rates is up in 260 of 389 metro areas. That means jobless rates are up in 66% of the country. They just kind of throw that little report and that data in
Yeah.
there. Job gains are 7.6 million in Q1, and they're just barely reporting the true net total for Q1, and losses are 7.1. So what are we at? About 500,000 total jobs in Q1. Now, that means we had job gains, job losses, and we're going all the way back. But remember, it was in the middle of the year that they knew they had to do revisions of a million jobs. So we should
Right.
be actually net down for job from net positive 500 in Q1, 1 million that we need to revise down in Q2, and whatever we're going to net out for Q3. But right now, that tells me that we should be negative 500,000 jobs.
Yeah.
And they just
You
kind of
know,
slide that in there, not as a major report.
and this is the thing is that, there are seasonal adjustments to jobs and stuff, but the hard thing is, like, you can see a data point. Like, for example, we just got advanced GDP this week
Mhm.
and 2.8%. But do you realize that while we're seeing here a number, this is the first estimate of quarterly GDP of 2.8%. A year later, we could look back on it and we can say we're negative. We're in
Yeah.
recession. I'm like, this is the inanity of this data. Yes, it's here where it's moving markets. They're kind of initial estimates, but the reality is it doesn't really give you a gauge of where the market's really at. Monthly jobless data, again, we start to see negative jobs, we're in recession. That historically, that's where we're at. And if we're, basically 12K for the last month, that's, we're flatlining.
Yeah. Well, and the fact that 12,000 jobs for October, we report it, they call it November's report. But the fact that we were at 12,000, that 106 was lowered already. So when we missed, we had ADP showing 185 and they completely missed. And so they revised 160 was expected for non-farm payroll. They revised that down. So it's even a bigger miss than what you would have seen on Monday.
Mhm.
So last Monday they would have, right, or Tuesday even, they would have had it at 160,000 expected and we dropped to 12,000. So it was really revised
Yeah.
lower in their expectations before they missed expectations, revised the previous month lower.
Right. So we had the Wednesday ADP non-farm employment change, 233,000. You love economists like Mark Zandi, that go to ADP. They construct a model. They changed it. They changed the model so it's going to reflect the unemployment report coming from the government, the BLS. And this is a huge miss for them, right? I mean, huge beat of estimates, but a huge miss on what's actually the government's reporting. And so, I mean, even people that are connected, that are modeling this stuff, they're grabbing at straws here too, trying to figure out what the actual number should be. But yeah, this is a big deal. I mean, you start to see unemployment rate reverse, right? We start to see negative unemployment. This goes just 12,000 jobs the other direction. I mean, historically, we're in recession.
Yeah. Well, and it's the game, right? As you said, we get jobs every month. We go negative far enough in the monthly data or even the weekly data that builds up. We actually get little tiny data points all along with non-farm payroll. And then we're supposed to wait for 2 quarters, 6 months, which is lagging on the lag. And so, yeah, I mean, really, we're 7 months. We will not know if we've been into a recession at least 7 months after the fact. That's the way it works.
And you'll see here we got unemployment claims. I guess it was there. 216,000 was the unemployment claims. The rest is stagflation. Thank you, Powell. Powell and company. We have to account for government spending, accounting for a lot of that. And we're seeing huge deficits being built, hundreds of billions of dollars in the last few weeks. Fourth quarter funding is expected to be over $500 billion, meaning what? They're going to borrow $500 billion. That's $500 billion that you have less that can be used for private investment, homes, etc. But I'll tell you just a little anecdote. Talking with a friend of mine, he's a home builder here in the southern part of Utah County where Blake and I live. And he said, we saw a bump in September when the Fed cut 50 basis points, everyone rushing out to go buy a home. Since then, it's been completely dead. Nothing for like 5 weeks. They can't even show homes. Nobody's even showing up.
And I just saw a report. This is the 6th week of rising rates.
Mm-hmm.
Every week has gone up for 6 weeks.
Yeah. And so let's take a look at that really fast. I mean, you look at the TNX. I mean, it's just reflective of the Fed's cuts 50 and what rate yields have been rising ever since. So they mow us over by raising rates quickly on the front end. All of a sudden they cut by 50, causing the 10-year to run. And they're taking us on the other end too. Banks are being profitable right now. They're able to pass on higher costs because long-term notes and bonds have been selling off, although we're seeing a little bit of a bid today in TNX. Let's take a look at the market's response to the jobs number. Is it bad as good as bad?
Yeah, I think so.
Gyration here, but we're generally higher after the announcement.
Yeah, that was not earnings. That was purely based off the idea that if it's that bad, then maybe we're going to cut rates again. Yay!
Yeah, we're back to that same old story. The Fed, again, at this stage, I mean, it tends to be preeminent because we know the emperor has no clothes, right? You can see it. The market sees it. So we see positive data. It's not going to yield as much as negative data. In this case, it's a negative data point until eventually we start to see the defaults start to pick up and we come to the realization that we have no clothes and there's no way to hide it anymore. But right now, again, we think the Fed can hide it through rate cuts and obscure. But right now, again, we're modestly higher, about 0.5% in the S&P 500 overnight.
Yeah, so pricing, and it's interesting. Yesterday, we said the predictive, the CME tool. You don't need to pull it up here, but I thought it was really interesting that we actually kind of bifurcated. Probabilities also pushed to no cuts to 2 cuts. We push both directions. We're either going to do nothing or we're going to do 2. And so the market was even having a hard time even putting data on the table that the CME could decipher. And so today I think that'll be undone, and we'll probably be back to looking for 2 cuts in December. So,
well, we're essentially, I mean, Fed policy is entirely rudderless at this stage, right? I mean, there's no comprehensive or coherent policy coming from the Fed. We do see a bump in gold, right? If the Fed's going to cut, weaker dollar, gold may after it's selling this week. We talked about taking profits last week, but again, saw a nice little dip back to where we were. Hey, look, the Fed's going to cut, stagflationary type scenario. This is a best case scenario for gold. Weaker dollar, stagnant economy, gold moves and generally outperforms the S&P 500. So you'll see gold's up 0.6%, where the ES is up 0.5%. So
Yeah,
gold
and we had that
outperforming
question
overnight.
yesterday. Is this pullback? I think it was Peter, but maybe it wasn't. I don't remember who was asking. Is this the time to go ahead and step back into gold, the pullback? I would have said, I actually said, let it come back a little bit further, but now with payroll, that might have been it.
Yeah, right. This is a huge turn, but
Yeah,
it's a small one, right? We're seeing a little
yeah,
bit of a reflexive action. Is hey, let's buy gold, weaker dollar. Fed's going to cut rates by more. But going into an election with all this stuff, I mean, it's hard sometimes to kind of get a feel for where the market's going to be next week. We'll talk about some of those scenarios in a minute, but one thing that is churning right now, Blake, is earnings flips. We're playing data, right? That's coming out
yeah.
every day right now. It's pretty heavy. There's some big names announcing this week. We got some earnings flips updates here. Starbucks, Microsoft. We'll see Amazon, Apple, and Intel this for today. But what do we got on earnings flips here?
Well, it's just simply that we're following the guidelines, we're following the rules, we're doing the setup, we're sending out the alerts. And so in these strategies, we've already, Starbucks, maybe we get the lift today. I don't know. That actually might turn positive by the time we're done.
Because if
From
it's
negative one.
worthless, why not hold on to it, right? Because you can't
Yeah,
sell it.
well, yeah, exactly. That's the point of these earning strategies. We ride these into the close, and we're looking at this and saying, Starbucks has to get up there and push above the highs. I think we were at 100 off. As actually, I'd kind of written it off in my head. So,
Mm-hmm.
and that's part of what we do is, it's going to either play out and make us money, or can let it ride out because the cost is so low. So Starbucks, we need it to get up there and get past 103 for a big win. But
Oh, 103.
I don't know if we're going to get up there. It
Yeah.
didn't react. You can see it's flat. This is the one
Yeah.
area that we can't have it play out, which is fine. But
And that's a
1 out of 5. That's it.
yeah. That's a tug of war, though. I mean, rangy candle, small body, long legs. I mean, again, this may not break out today, but
Right.
this is really compressing here. It's going to move one direction or the other.
And it
We
is
got
actually leaning up in the after hours. It's kind of funny.
yeah.
So Microsoft, we exited at 247. So that's why you said I wasn't saying on track for on these first two, because we're done. We are, if you miss one and you lose 100% and you make one 247, which is not what we like. We actually wanted more, but
Mhm.
that's easy math. That's positive
Yeah.
147. Amazon's right near its target. Apple's right near its target. Intel's right near its target, or nearing its target, but Intel's down a little bit further than where it should be. So Amazon, we're looking for Amazon to dip back, or sorry, to stay up there a little bit. I was thinking of Apple first, but leave it here. On Amazon, if we can hold at 200 this morning after the
Mhm.
open, we just have to go back right to where we were just a few minutes ago, then this is possibly going to get us closer to about 250, 300% return, maybe a little bit higher. And these Fridays are actually ideal. This is where we can really dial them in. Thursdays we have to do a little bit more adjustment to it, but this could be 300, 400%, and we're within spitting distance
I was going to
of getting
say
right back
spin.
there. Spitting distance is the rule.
Right.
With
I
two.
mean, like years and years ago, Mike Torino, we call it cheap shots, right? These butterflies over earnings
Yeah.
using expected moves. And again, again, this is a great thing. You get 2.5, 3 to 1. So you lose 100% on one. But again, this is where if you just take one trade and it doesn't work and you stop, okay, this has to be
Yeah.
something you're committed to doing, right? Through the earnings
Yep.
cycle is just keep going, right? Keep going. And Amazon here looks like we're gonna hit the expected move of 200. Hopefully it doesn't. I mean, again, if it pulls a Google, Blake, I mean, what's the solution? I mean, Google kind of popped and faded this week. I'm sorry, 5 minute popped and then it started to fade. But look, where it opened here
Mm-hmm.
again. How soon do you want to close it after the open? As quickly as possible if you're on the spot.
If you're on the spot, you're trying to close it for your gains that next day. Now, again, that's why I say that Google didn't meet our conditions, because we generally want to close these on Thursdays or Fridays. And so Google was too early in the week. I
Right.
structured it in a way and we explained, hey, this still works as an earnings trade. It's not following our guidelines for the butterfly. And so this one gave us an opportunity to sell premium and do the calendar. It worked out great. I revisited it with everybody. We talked about it during the day on a Tuesday, and then we said, hey, this is where we get out. Now,
But
if
I was,
this
but
would
I
have
was
been
pointing
a,
out more just we open up here
yeah,
and then we just boom, right? So the idea is
yeah,
that if you open up in a good point, don't wait around, right? Look to
yeah,
get it while it's hot. And that means
exactly.
closing it out.
And hopefully you get a little bit of the vol crush in the first hour or so, and it makes it
Yeah.
even more profitable. That's kind of the game. But yeah, that's why we prefer the butterflies on Thursday and Fridays. I mean, Thursday open, Friday opens. So anything Wednesday night, Thursday night, or Thursday morning, Thursday night, Friday morning. This is where they dial in. So Apple, our target's 220.
Nice.
Nice, huh? And so even that little spike on earnings or the employment data, who cares?
Yeah.
We were within about $2 here. And again, this one, as far as Apple is concerned, if we can move down just a little bit, we'll probably be in the 200 to 300% return on this one. But Fridays are awesome because Fridays, we see that go out really fast in the first couple of hours. And then we probably won't see much happen all the way the rest of the day. So this will give us about a 2 3 hour window to say, okay, this is it. This is probably it. Or
Yeah.
if we really were bold, then you can try to hold them to expiration, but be very, very careful with that. It's you, Don calls it pin the tail on the donkey, but at some point you've got to cut this free because the risk is too high to give back everything rather than hit that tiny little peak. So again,
Mhm.
we want to get out of this probably in the first couple of hours of trading today. And then Intel's just okay. It's not losing, it's not gaining. It's going to be just kind of a flat target because we needed it to be up. It's 24, and right now we're not at
Yeah.
24, but we're on
Kind of
we're
shot
on
up
the
there,
yeah,
kind of shot up there right after the close, kind of faded back a little bit. But this is
yeah,
where sometimes where the volatility hasn't entirely worked out. You're off your mark a little bit, but there's still some ball pumped into it. So sometimes that'll widen the range of profitability. And then as the volatility gets crushed, it closes the range and emphasizes the gain at 24. So sometimes you're off a little bit. It's a fielder's choice. Do you wait and for the vol to crush and maybe the price goes higher, or do you capture it while the vol hasn't entirely crushed and maybe you can pick up some gains here, which if you wait, maybe you don't.
yeah, and that's what we're going to kind of wait and see how it opens up here in just a minute. But I would just say if your vol crush is already gone and you're sitting here, just cut it free. Just
Yeah.
take small gains. That's what I would be looking for. Just a small gain and walk away and be happy with what happened and move on.
Yeah.
Yeah. So this one could be neither a win nor a loss. And so we're always kind of talking about full loss or 2, 3, 4, 500% gains. But some of them are going to work out like Intel. It might be a little gain and
Yeah.
walk away.
And then again, you're just playing. It's a 50-50 bet on direction, right?
Mhm.
You're only trying to figure out the magnitude, and we have the market talk about polls. In essence, that's essentially what implied volatility is, right? It's
Yeah.
it's taking everyone's assessment of what they think the market's going to be. And if we take the market's assessment right now on the election for 2024, who are the betting markets betting on what to win the election next week?
Do you think, did it shift this morning? Are you going to see different data this morning?
Yeah, I mean, it's come in, right? It was plus
Yeah.
60 plus for Trump, and that has come in close to 55, was 30 something, 40 something. The RCP, the Real Clear Politics average right now is for the first time this last week's leaning Trump. If you take all of the various polls, but again, certainly you can have a horse in this race in terms of like who you want to win. But again, as traders, we have to deal with whoever is in office. And I'll tell you, my dad, like, he used to get so like after an election, if it goes away, he would just be like, just down in the dumps for months. I'm like, dude, we can't do that as traders, right? You
Yeah.
gotta, whether you're a Harris supporter, you're a Trump supporter, doesn't matter, right? If the other person doesn't win, if your guy doesn't win or gal doesn't win, guess what? You've got to move on. You've got to find opportunities in the market. So as we look at the broader market, Blake, I mean, what are some of your thoughts on earnings right now? I mean, sorry, on the election. I mean, are there any dynamics from a sector level that you're kind of thinking about right now?
The from the sector level, I love watching rotation and just seeing where the money is ebbing and flowing in different sectors and even across bonds. Bonds are way up today, way up
Yeah.
after that payroll shot higher. So for me, no matter who wins, and I know this, as you know, I actually took a test of I can't remember the name of the group, Politico or something like that did
Mm-hmm.
this test, and I came in dead center, conservative, fiscal conservative, but social liberal,
So
and it
you gotta
put
have a
me
you gotta have to have,
barely center, barely right center.
for
So
me
I
it
don't
can't
have a
be
part.
linear. You gotta have some sort of, you have to have some sort of y-axis to kind of figure out where I'm at.
Yeah, me too. I mean, it seems linear, but I'm actually on a different point in the Z scale, right? Anyway, point being is I don't have a pony in this game. So when I say this, I'm being very sincere. I'm just following the data. Um, Either a Trump or a Harris win means more spending, and unless they tone that back, it is more recessionary. And if they tone it back, it accelerates the recession, but helps us recover without as much inflation. So your choice is stagflation or worse recession. Unfortunately, that's where it is. And
Mm-hmm.
Don says I tested and I'm socially deviant. That's right. They've, I've been people ask me if I've been tested all the time. I don't know what that means. Anyway, so as we're watching the data, I do think there's a problem ahead of us. But in any instance, and we're already seeing it happen, we're pushing harder and further into the defensive sectors, utilities, consumer staples. Healthcare, though, is the real opportunity, in my opinion, because healthcare has been beat down already. And I think that's just where I'm going to be looking for the next probably quarter is healthcare has been knocked so far down, and healthcare is normally a very defensive area.
Mm-hmm.
And so
Yeah,
this is a
we talked about
bargain.
and we talked about last week. I mean, you look at the areas of way outperformance, way above moving averages. It's financials and it's utilities. Utilities had a
Yeah.
decent week so far this week,
Yeah.
but it's healthcare, it's energy, it's staples actually that are on the downside, in terms of how, again, more stocks below their 50-day and 200-day moving averages. So yeah, I'm with you. I mean, look, I mean, again, people say, well, Trump, is going to blow up, or sorry, Kennedy is going to blow up, the pharmaceutical industry, whatever. It's highly unlikely that's going to
Yeah.
happen, right?
Not going to happen.
And so we can overstate it and the market can overreact. And yesterday's candle in healthcare was kind of interesting. We gap lower, we rally off the lows. You have, for example, a CNC. This is a stock that if jobs market is going to tank here, I mean, if we're going to see more unemployment, this is an insurer for people that are on Medicaid or CHIP and all this other stuff. I'm like, hey, enrollment numbers for companies like this should go up. And
Yeah.
so right now we kind of see a lot of volatility down here, but again,
It is
CNC is one that,
open earnings. It is open enrollment season. So
yep. So we
you'll
may
see.
see some numbers that could be positive in CNC. This is an area, going back, this is a pretty significant area of support historically for the stock too. This is what I'm kind of looking at in the healthcare space. But yeah, I mean, what do you think? So again, we're looking at gold. I mean, which administration does gold shine?
Uh, I think the
Or is the luster gone? Is gold finished?
no, I don't think so. I think, like I said, I think that pullback, I was looking for just a little bit deeper pullback. I think both are going to create more inflation. And so the question is, like I said, stagflation or recession, and it's more their action. I don't know if there's one administration I can point to. The data, and so yeah, you're teasing you're pulling me in. I don't want to do that.
Pulling into gold?
No,
Bitcoin?
you're pulling, well, that too, but you're pulling me into, as I'm going to say something political.
Oh, okay.
Um, both are going to spend more money.
Here's the
That's it.
thing. I mean, we do have a Congress, right? I'm like, I mean, even back in the Trump's administration, I mean, how much they really accomplish. I mean, there was infighting between the parties. I mean, Don's looking for wants gridlock. How do you really make significant moves on structural spending? It's unlikely to happen. So, I mean, maybe on the margin. I mean, gold first 2017 market did phenomenally well. Gold did not do quite as well. 2020, the election here, I mean, gold kind of stumbled for a little while.
Mhm.
But then once the spending really began to kick in, the deficit spending, the lack of real traction on the growth side of it, this is what led gold to really surge here,
Yeah.
stagflation. So yeah, I mean, I'm with you. I mean, I think we got to look undervalued areas of the market right now. Dividends. I pulled a
Yeah.
list of dividend paying stocks. Altria had a huge week this week.
Yeah. That was going to be on my list of something to talk about because of this very thing. Massive beat. And I love the fact that you're looking at dividend stocks again, because that's, people always say, stagflation, what do we do? Because everything stinks there. Dividend stocks are a great place to be. You look at
Yeah,
how dividend stocks performed in the 70s and 80s, and it was dividend stocks and then into junk bonds because it was always searching for that return. So they
yeah,
kind of rotated over. We're seeking a return at this point, a consistent protected return.
absolutely. And that's the thing is, I'm like look, if the Fed's going to cut rates and we're going to see yields drop, right? I mean, we're seeing a little bit of reaction today. I mean, look, looking for dividends is not a bad situation. I actually made took a list here, but you've got Altria top of the list of dividend aristocrats in terms of dividend yields. But Kimberly Clark, this dropped on its earnings. Hey, these are ones that the more it drops, as long as they can pay the dividend, these guys have been paying it for what, 50 years and raising the
Yeah.
dividend for 50 years. I mean, look for it to drop. Root this sell off on. Kimberly Clark, get down to 120. Go, go, go. I'll meet you down here. Right? I mean, the reality is if we're seeing selling rooted on, set your price, the price being the yield that you want to receive. That's where you look to pick these stocks up. So selling is good if you're a dividend investor because you want to buy low when the yield's high.
Yeah. Well, and if you end up buying it, if they consistently pay out their $1.22 a quarter there, and you're at what, 488. If you drop all the way down to $100, now your dividend yields at 4.8%.
Right.
And then you
Right.
hold that and you do like Warren Buffett. His Coca-Cola dividends are like 80% return a year off
Right.
his original investment.
And that's the thing is that people sometimes just get so like, I got to do it now. No, you don't.
Let it come to you.
Interest rates right now are around 5%. I'm like, just set it aside and say, okay, I'll meet you, Kimberly Clark, when you get to 120, whatever that
Yeah.
number is, right? Whatever that nut
Yeah.
is, the deal that you want to see from Kimberly Clark, and say, okay, now I'm a buyer.
Yeah. And I think that ties really well. Dividend stocks that are part of the defensive stocks. Find those dividend stocks are part of the defensive sectors, and those are going to be the ones that are going to give you the earlier signals. So you're talking about consumer staples, utilities, and healthcare. Let them pull back to where they're at. Keep focus on those dividend stocks because those are going to be the ones that you have to manage the least while giving you the best return away from the volatility that is the tech
Right.
sector, the volatility that is the bond, even bonds.
Yesterday I was talking a bit about, here's SMR, a huge move, but you come over to the trade tab, you look at its beta. Oh, that was a higher beta, but 3.5 beta, but look at the volatility. I'm like,
Mm-hmm.
what you're going to find is there's a lot of stocks that have an understated delta. And so the idea is here's Tal Education Group, 0.89 beta, less volatile than the S&P, and yet its volatility is 3 times the S&P. The reality is this is where you've got to look to take profits in higher beta names and look to lower that beta. Look for real low beta, not false low beta like a
Hey,
Tal.
Brandon, beta.
Yeah.
What's beta?
Beta. So for example, if you have a beta of 1,
Uh-huh.
right? The S&P is a beta of 1. So you have a stock with a beta of 1. S&P moves 1%. The beta of 1 should move 1%. This
So
is
a beta that
suggesting
is
that
two
Tal
and
would move less
three.
than the S&P. Go
Yeah,
ahead.
so a beta of 2 and 3 means you got these high flyer like tech stocks, right? That
Yeah.
if the S&P moves 1%, a beta of 3 means that it moves 3% on the same day, roughly. So something
And
that has a
and again,
lower beta.
but there's an assumption that there's correlation as well.
Yeah.
Something we're looking at CrowdStrike yesterday. This has a beta of 2 or 3, but is CrowdStrike really going to move 3 times? It might move 5 or 6 times the S&P. So it becomes difficult to hedge some stocks that really their beta is obscured because of the lack of correlation driving that beta artificially low, like a Tal Education. But sometimes you'll see 2, 3 betas. They're really more like 5 or 6. So you just got to be careful right now in this market is that, look, we may be on the cusp of a sell-off here. So far this week, we've been looking at, generally speaking, no matter who's in office, are looking for some selling next week. Talked to Bierman yesterday. He thinks that the market's going down regardless of who's elected. So if we're poised for a major sell-off here, you don't want to be the one where the NASDAQ's down 13% and you're down 46.
Yeah. Yep. And like I said, the beta is not correlation, it's magnitude. And so just keep that in mind as you're watching those. There are ways to play this
Yeah.
safely.
So
So
it's magnitude of movement, but it requires a degree of correlation for the beta to be accurate. And
yes.
that's the underlying problem where beta can be understated and you just don't realize it. But check the volatility. If it's 4, 5, 6 times more than the S&P, yeah, you got a pretty volatile stock on your hand there.
Yeah. If it's a beta of 4 and has a 80, 90% correlation, then there's opportunity and risk.
There you
So,
go.
and the UK Ray says, yeah, but sometimes stocks with low betas numbers have high IVs, so they don't. They usually do. If they, well, I shouldn't say I read that wrong. No, low betas have high IVs, so they don't move as low beta stocks. Yeah, it has
Yeah.
to still have the correlation. So,
And I forgot the example we looked yesterday. It had a beta of 0.5 and it
mhm.
had a volatility of over 100%. So it's just one of those things like, again, sometimes the beta does not accurately represent. And to be honest, it's hard to hedge those stocks. It's easy to hedge dividend stocks, S&P 100 stocks. Those are the ones you expect to model the S&P 500 returns, whereas a lot of these other tech stocks, and that's why I shared that stat last week. The drawdown for the NASDAQ was 13%, but yet the average drawdown of the components of the NASDAQ was 46%. Which side are you on? The 13 or the 46? You want to make that assessment right now and decide whether you want to reduce risk.
Yep. Hey, so next week there are a bunch of earnings coming out, but they're going to kind of be a lot more muted compared to this week. I mean, this was the big tech week. So we had banks, and you kind of slow down, then you do the big tech, and then you kind of slow down. But it is interesting to me that we are going to see some of those healthcare stocks kick in. We're going to see, Coca-Cola and some of the consumer staples. We're going to see the leisure world kick in. I'm gonna get my leisure suit on, and we're going to be looking at things like Marriott and Wynn and things like that. Do
Yeah.
you think that those leisure stocks, and this is one that I've talked about previously, do you think the leisure stocks are going to be able to perform well, or do you think that we're going to see all that payroll data playing out in the leisure stocks for this next quarter? Because you like jets, right? You like jets down.
To the
I
downside,
like
yeah.
jets.
I mean,
I talked about Wynn and Las Vegas Sands and jets
right.
and down as well. So
The pricing's tough on jets. I mean, the options are just not very liquid in terms of the bid-ask spread. I've been looking at UAL on the bearish side.
mhm.
But yeah, that breakout and win yesterday. I mean, look, this is a big deal, right? I'm like, but UAL, I mean, I think it had a little bit of a bearish day yesterday, but I think these have some downside here. So I think there's going to be some rotation. We'll see what it is. But the crowded trade right now is utilities, but it is a defensive stock.
It is.
Made a nice little bounce back yesterday. Failed to break above the high from the gap day, but yeah, I think some of these stocks that have done really well we're probably going to see some rotation towards value unless the Fed just hits the accelerator pedal. Question on XLE from where was it? Mark. So XLE, yeah, I mean, I think this is one area that it could perk up. Don was looking at catapult on XLE as well. Again, oil inventories are down. Recessionary pressures might keep oil prices down, but again, oil inventories we're short right now, and we're
Yeah.
not producing enough. And so again, yeah, I mean, we might see a little bit of pop here, especially if the Fed looks to cut rates, and because of the jobs data and other data that's coming out, they lean on
Now,
cutting. Oil prices
if
may
they
surge here.
if they cut and inflation spikes, it's got to go to 78. But I think the bet is to the upside with this too, is because the amount of drop in demand to offset the inventories and possibly a rate cut.
Yeah,
That, I mean,
not there.
that'd be horrendous as far as the demand drop. And so yeah, that wouldn't be just stagflation, that would be recession, even depression
Right.
type of behavior. So I do think
Be
the
like
upside
COVID,
is really,
right?
yeah. I think the recession would have to be significant and already established before that sells off. So I think it's a good
So,
opportunity for looking bullish.
yeah. Yeah, again, I think oil right now we're probably skewed a little bit to the upside. The crash risk is the upside. We're in backwardation still. So again, for XLE, off the dips down here, I think it's, and the biggest holding in XLE is Exxon. So again, these have been probably the more sure bets. I've tried to look at service companies like Halliburton, Schlumberger. They just can't get out of their own way.
Yeah.
Even like again, producers, service stocks. Rig had a nice earnings yesterday, so we're almost back to break even on the call, the $4 call we talked about a few weeks ago. But this maybe we see some upside here, but certainly the easier bet is on your integrated names. We kind of went bearish on service or sorry, midstream companies like KMI. We were able to close that out, but yeah, you look for midstream to come back. All this is a pretty crowded trade. Sometimes the integrated is the way to go. Maybe refiner, but refiner needs to see the gas prices are holding up, and if we're seeing weaker demand, that's not going to be the case. So I think the natural play right now in energy is the integrated names, your Exxon, Chevrons. And by the way, Chevron does pay a pretty good dividend, over
Yeah.
4%.
Yeah. So you get a double. I used to call that double dipping because I'd say buy a
Mm,
dividend stock low and then sell covered calls to it as it rolls over at the peaks. So you
yeah.
get paid on the growth of the stock, you get paid on the dividend, and right now this is setting up for and really so it's triple dipping.
Yeah,
So
I mean,
yeah,
take that $1.63 dividend, buy a put if you want.
yeah,
I mean,
protect
again, we've
yourself
already
and just
had,
let it
we have
go.
earnings that came out. We're right now at 152. So we're popping up here. Not a huge move. But again, if you're concerned, take the next dividend, buy a put for 30 days and see what cap your risk and give yourself a little more comfort level. And this is one I think that does have some upside and the dividend. You can buy a little protection with the next dividends, go next dividend here on the 18th. It's not a bad combination. Just say, hey, can we get to 165? Great. Sell it if you want.
Yeah. Well, Brandon, these mornings go by fast.
They do.
We are out of time. It's time for Don to take the reins and take us into the day. So thank you all for being here. I would ask for parting shots, but we're actually over. So have a wonderful day, everybody. Have a fantastic weekend. Hopefully your Halloween was awesome. Brandon, thank you as always for driving. I like to sit here over in the corner and just like drive on these mornings. So thank you so much. Uh,
And I will know, I will make a note. We don't know
yeah.
what it's going to look like, but we're going to potentially do some election coverage on
Oh,
Tuesday. So look
sweet.
forward to that.
I will.